Welcome back to Explain the Charts, everyone. Today, September 22nd, 2025, we're zeroing in on Amazon, ticker Amazon, to dissect both the fundamental news driving its movements and the technical patterns emerging on its charts. The broader market has been buzzing with bullish sentiment, with the S&P 500 recently topping 6,600 and the Nasdaq extending its record streak, largely fueled by rate cut relief from the Federal Reserve. The Fed made its first interest rate cut of 2025 and signaled two more could be on the horizon, yet there are lingering concerns about a weakening labor market. Despite this generally bullish backdrop, Amazon has seen some interesting price action, currently trading around $229.19 as of this morning, slightly down from its last recorded close. Year to date, Amazon is up approximately 5.5%, but this actually trails the S&P 500's robust 12.5% gain, indicating some underperformance compared to the broader index. Let's bring up the daily chart to get a comprehensive view of AMZN's journey over the past year. Now, let's zoom into a critical period, late July and early August 2025. On July 31st, Amazon announced its second quarter earnings, which, despite beating expectations, led to a significant 8% tumble in the stock price. This sharp reversal, clearly visible here on the daily chart, was largely attributed to SOSO revenue growth from Amazon Web Services, reigniting fears about its competitive stance in the burgeoning AI market, and lower than expected Q3 operating income guidance. Notice the massive volume accompanying this drop on August 1st, where the stock opened at 217.21 and closed at 214.75 after trading around 234 the day before, underscoring the market's strong reaction to those specific concerns. This level around 212 to 214 became a crucial short-term support zone immediately after the earnings shock. Shifting our focus to an earlier period, let's examine the price action around President Trump's tariff announcements in April and May of this year. On April 2nd, the market initially saw volatility, as seen in the wide range of candles during that first week of April, rather than a clear immediate decline following the broad tariff plan. However, the week of April 7th to 8th showed extreme swings, including a significant one-day drop of nearly 8% on April 8th, followed by a substantial recovery. The subsequent deal on May 12th to lower tariffs on Chinese imports was reported to have brought a relief rally, though the chart indicates a more nuanced, volatile reaction rather than a singular strong upward surge, with the stock seeing a slight dip on May 12th before stabilizing in the following days. This demonstrates how macroeconomic news can often lead to complex, multi-day market reactions rather than straightforward moves. Now, looking at more recent news and its potential impact, several analysts remain highly bullish on Amazon. Just recently, Truist Securities raised its price target for Amazon to $270 from $250, citing strong revenue growth and sustained demand, with their card data suggesting North America revenue is tracking approximately $1 billion ahead of Q3 consensus. Retail sentiment, according to StockTwits data, is extremely bullish, and this could very well explain Amazon's resilience and recovery from its early August lows, climbing from the low 210s back up towards the 230s. Looking ahead, Amazon has announced its Prime Big Deal Days for October 7th and 8th, which will serve as an early kickoff to the holiday shopping season and a crucial test of consumer demand. Additionally, Amazon is actively expanding its grocery reach through partnerships like Winn-Dixie in Florida and is taking its Whole Foods Market brand to Singapore, indicating aggressive international growth strategies. However, we must also consider potential headwinds, such as the new H-1B visa fees, increasing operational costs, and ongoing scrutiny of AWS's position in the fierce battle for enterprise AI spending against giants like Microsoft and Google. These factors contribute to a complex outlook that demands close monitoring of the chart. Zooming back out to the full daily chart, we can observe a clear upward trend from its May 2024 lows around 173 to 176. culminating in peaks near 242.52 in February 2025, which represents its 52-week high. Post Q2 earnings, the stock established a strong support level around 210 to 212. Since then, Amazon has been in a recovery phase, forming higher lows and challenging resistance zones. The level around 235 to 238 has acted as a recent resistance, as the stock has struggled to break cleanly above it, notably seeing a pullback from 235.68 on September 4th down to 228.15 by September 12th. The last recorded close in our data is 231.48 on September 19th, showing a slight bounce from those recent lows. However, today's current price of 229.19 suggests a minor dip at the open. This consolidation between approximately 228 and 235 indicates a battle between buyers and sellers, with significant volume bursts often accompanying moves out of these ranges. Let's switch to the 1-hour chart to get a clearer picture of the very recent price action, specifically from early September. Looking at the period between September 9th and September 10th, after a strong push towards 238, the stock encountered selling pressure. We can see a clear short-term downtrend beginning around 1300 hours Universal Time Coordinated on September 10th, where the price dropped from 237.95 to 230.35 in a matter of hours, on significantly high volume, indicating a strong bearish impulse. This hourly perspective shows how quickly sentiment can shift and provides traders with tighter entry and exit points. The immediate support for this hourly chart can be observed around the 229.00 to 230.00 level, which corresponds with the Google Finance real-time dip we noted earlier. This level is crucial for short-term bounces or further declines. Now, for the ultra-short-term perspective, we turn to the 15-minute chart, focusing on the activity from September 19th. Notice the high volume spikes around 1317 Universal Time Coordinated and 1947 Universal Time Coordinated on September 19th. These rapid price movements and increased volume during specific 15-minute intervals can provide critical insights for day traders. The stock experienced a significant drop from around 233.17 to 229.70 between 1317 and 1947 Universal Time Coordinated, followed by a bounce back to around 231.70. This chart highlights the intraday volatility and the quick establishment of micro-support and resistance zones, suggesting that the 230 to 231 range acted as strong intraday support while 233 to 234 presented a hurdle. For active traders, these tight ranges and volume surges are key indicators of liquidity and potential short-term momentum shifts. Let's recap and look at the short and long-term outlook for Amazon. Reasons to be bullish include the robust overall market sentiment, strong U.S. retail sales in August, Amazon's strategic expansions into groceries and international markets, and the highly anticipated Prime Big Deal Days in October. The recent Truist price target hike to $270 and overwhelmingly bullish analyst recommendations also bolster a positive long-term view. Conversely, reasons for caution include the slowing AWS growth amid fierce AI competition, the potential impact of new H-1B visa fees on operational costs, and broader economic uncertainties like the weakening labor market, even if retail sales remain resilient. In the short term, a retest of the 228 to 229 support level is quite likely, with an estimated 60% probability, especially given today's pre-market dip. A successful bounce from this level could see Amazon challenging the 235 resistance, possibly in anticipation of strong Prime Big Deal Days, which we estimate at a 55% likelihood. For the long term, if AWS can regain its AI momentum and holiday sales perform strongly, a move towards the 260 to 270 analyst targets is reasonably likely, perhaps with a 70% probability over the next 6 to 12 months. Traders should closely watch Q3 earnings reports for AWS commentary, overall consumer spending data, and any further updates from the Federal Reserve or on tariff policies. Remember, these predictions are conditional. Always look for confirmation of these trends and reversals before making trading decisions. Thank you for joining Explain the Charts, and we'll see you in the next one.